I'm going to go ahead and introduce myself a little bit more. I've got a really neat presentation for you tonight, and it's about using some of the tools. My job is to show you how to make your job a lot easier, and I just want to show you that. And before we do that, you're probably familiar with the normal risk disclaimers. You know, anytime you do any type of investing or trading, risk is involved. So you want to make sure you do not invest money that you cannot afford to lose, okay? What that means is please, 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 no matter what you do, where you do it, how you do it, always follow what we call is proper equity management, or some of us, I call that risk management. What that means is you want to start off with a small account, or better yet, you can actually start out with what's called a demo account. So you can actually place the trades in the market so you can see the gains or the losses. But when you start with the demo account, you're learning, you're practicing. The gains and losses are not real. You can still see them. You can still track them. That's the way that we talk about that, because losses are a normal part of the process, okay? You're going to have winning trades. You're going to have losing trades. Now, we are not CTAs. I am not a commodity trading advisor. I can't trade for you. We teach people. I'll tell you a little bit more about MTI, Market Traders Institute, in just a moment, but I want to make sure everything is doing there. Okay. So yes, sir, can now. So like I said, I like the comments. So today's agenda, I'm going to be just briefly introducing the Forex market, okay, the foreign exchange market currencies, okay, and I'm going to be talking about how to do analysis with charting and some of the automated tools. And this charting and automated tools is not just for Forex. You can actually use it for others. I'll bring you up to date where we're at right now. So I'll show you a current trade opportunity. We're going to talk about how easy it is if you're interested, where you can actually set up a demo trading account so you can practice type of thing. And we're going to do a special trial basis where you can try something out very, very inexpensively. I'll just tell you, less than a pack of gum. I'm kind of giving it away. But first off, a little bit about myself. I know Renee kind of talked about myself. You know, I've got all the accolades, okay? You know, I went to school, I got my MBA. I've been actively investing for over 25 years. I was actually 18 years of age. I was in college, I had a little extra money, and I was interested in the stock market. And I worked with a stockbroker. And I said, what should I buy? And he said a utility, so I got into it. And eventually I ended up working for that firm as a stockbroker. But the problem was I had so much fun trading. I had so much fun educating people. That was what I did. I traded and myself, and I educated people. And that's where I get a lot of fun out of. And that's kind of my actualization, helping people realize their own financial independence. So I have a lot of experience personally educating and mentoring people. I've done that now for over thousands of people. I'm a speaker, I'm a mentor. On this slide right here, it says I'm a full-time trader. Honestly, I consider myself a part-time trader. I probably spend, you know, 30 on a busy day, maybe 60 minutes a day looking for trade setups, and then I go enjoy life. Renee kind of said it, I'm semi-retired. You know, I used to, if anyone can relate to this, I used to have a job where I worked 27 days out of the month, 27 out of 30 days, and I was working 80 hours a week. I made good money, but I didn't have time for my family. I have a beautiful, wonderful 9-year-old daughter, and I just wasn't around for so many events. Put a me or yes in the question box if you can relate to that. And I kind of said, you know, I like the money, but I didn't like all the hours. So I said, there's got to be a better way. And that's when I took a better active role in trading. I got myself an education. I got myself a mentor. That's what we do here at MTI. And then suddenly it started working. And I can tell you, where people talk about living the life or living the dream, I just want to share with you, it is for real. We have hundreds and thousands of people that are doing it. I consider myself one of them. I just got back from a 2-week-long trip. We call it Dad's Trip. Dad's Trip 2.0. My brother-in-law and his 2 kids and me and my daughter, we did it last year. We just got back from 2 weeks out west. And we did Glacier National Park, Yellowstone National Park, Grand Teton National Park. We hit some Montana parks, and we saw, we saw moose and bison and elk and bear. It was just a wonderful time, and that's what trading has allowed me to do with it. And I talked about you need a good education, you need a mentor, and that's what Market Traders Institute does and is all about. Okay, we call ourselves MTI, or that's the short, but it stands for Market Traders Institute. And we've been doing this now for over 23 years. A gentleman by the name of Jared Martinez, he's the one who founded the company. He's actually been actively trading for over 30 years. He was having great success. He saw what was working. He had a lot of people ask him, hey, you're a successful trader, can you teach me? He started doing that for 10 people and then 50 people, and then he said he couldn't do it by himself, and he formed MTI. And we've been doing this now, formally set up as a company for 23 years. And if you know anything about the investing, active investing, and trading industry, any company that can be 23 years old has got to be doing something right. And we are the leaders out there. We have over 30,000 students globally. We're in over 30 countries worldwide. We're pretty well known. And if you look on the screen right here, on the left-hand side, you're going to see hopefully three words in like an orange where it says education, software, and mentorship. Now, first off, we provide world-class education on a daily, weekly, and continuous basis. We teach people about the markets. We teach people about psychology. We teach people about entries and stops and risk management and strategies. We're going to teach you. Okay, we're going to do it. But you could have all the education in the world. I could teach you to be a great carpenter, but if you didn't have tools, it'd be hard to do it. So the next on here, you see software. And we have what I believe are the best tools, and within that is the software, like charting and automated tools and automated trading. So they're just world-class. They're proprietary. We've created them, and they do great. But you could have the first two items, but if you did not have this last ingredient, I just don't think you'd have a great chance of success. And that is mentorship, because I can tell you, I've done education in the past at other places. I got the week-long crash course, and they said, see ya, send us a postcard if it goes well. Well, it didn't work. What MTI is all about, not only do we teach it, not only do we give you the mentorship or the software, the tools, but we continuously work with you on a daily and weekly basis. If you look in the slide right here on the very bottom, it says we never leave a client behind, and we do not quit on you. We will work with you and work with you and work with you until you're successful. And if you're successful, we're going to say, hey, kind of help some others too. So this is what we're about. We're based out of Orlando, but a lot of our education is just like you're doing right here, right online. So from the convenience of your own home, that's how the majority of it is. Every now and then we'll have a 3-day class at our headquarters. You're seeing here. If you want to come, you can. If you want to do online, it's fine too. I've actually done both. I like online because it's easy, but I also like to press the flesh. So we give students the opportunity to do both. So it's really a great company. And we're very well revered in the industry. We're very well rated. We were actually one of the fastest growing companies in 2015, and then again in 2016. We believe in a great corporate culture. This last year, for companies, we raised more money for breast cancer. If you remember the pink and everyone walking around, our company raised more money than all the other companies in the state of Florida except one, Disney. And there are some big companies. We have about 200 employees, but we still raise more money than many of them. So just a tremendous company, great respect. Again, last year we were the 592nd fastest growing company. We're expecting to do great things again this year. So very well established. Now, that's a little bit about a company. Now, I'm going to talk a little bit about the foreign exchange market, the currencies market. But before I do that, I'd like to have just an idea of where everybody's at. So on a scale of 1 to 3, I'd like to know what your experience level is. Now, if you're not familiar with the foreign exchange, the Forex market, currencies, if you've never placed a Forex trade, if you don't have a Forex account open, even if you don't even know what it is, or maybe you've heard of it, but you're not trading in it, I would probably consider that a 1 or brand new. Do me a favor, in the chat box, question box, based on the screen, type in the number of the experience level that you think you would have. So again, if you're fairly brand new, haven't opened up an account, haven't placed a Forex trade, you're probably 1. Go ahead and put that in. Now, if you do have a Forex account, or you've done some Forex trading, some education, that type of thing, put in a 2 if you wouldn't mind. And then to me, a 3, an experienced Forex trader is a person who's making, placing enough trades where they're consistently profitable month after month, making $5,000, $10,000 a month or more. We have many people making over $20,000, $25,000 a month. That would probably be closer to a 3. So if you want mine for everyone, in the chat box, put either a 1 or a 2 or a 3, just so I can have that. So Tina, I see that you say you've got 18 months in the Forex. How are you doing? Are you consistently profitable on it? Valerie, Roland, Della, Byron, I see a lot of 1s, a couple of 2s, Vincent, Hannah, Randy, I see all there. Okay, good. So I'm looking at predominantly a lot of 1s, a couple of 2s, and I think I've got 1, 3 in there. Okay, and that's about right. That's kind of where we see things. Ron, I see you there too. Good, thank you so much. So that's about right, and that's okay. That's okay. That's what we're going to get. Tina, definitely understand that. That's what we're here about. we help people to become consistently profitable. Stacy, I see you there. So I'm going to kind of start. I'm going to do just a very, very quick introduction to the foreign exchange market before I go into some of the tools and strategies. So what is the Forex? Okay, what does it mean? What are pips? Where do you start? Okay. Well, first off, the Forex market. Let me just kind of share with you what it stands for. Forex, foreign exchange. If you take a look at the first three letters of the word foreign and the first two letter words of exchange, that's where we get the word Forex. We put it together and we call it Forex. And all it means is you're exchanging one currency for another currency. For example, I'm based here, I live here in the United States, and I recently went over to Europe, spring break. My wife and daughter and I, we went over there for spring break. We just chose to have some fun. And so if you did the same thing, you would take US dollars and you would have to exchange it for euros because that's the local currency over there. Well, guess what? If you've ever done that, put a Y or yes. If you have ever changed one currency, if you've ever exchanged it for another currency. For example, if you're in the US, you went to another country, Mexico or Canada or Europe or wherever, if you ever had to exchange US dollars for another currency, put a yes, Y or yes in the chat box, the question box if you want mine. Because if you've done that, congratulations, you have actually done Forex. That's all it is, okay? It's just exchanging one currency for another. Now, in this example, you're over in Europe, you spent some money, euros, you have some extra euros, you come back to the United States, you exchange those euros back for for US dollars. Guess what? You did a Forex exchange again. So Kathleen, see, you got it. Ron, Steve, I've got all of you. So that's all it is. The Forex trades, when we trade it, all we're doing is we're trading the fluctuations of price between the exchange rate between any two currencies. Okay, for example, many years ago, before the euro, I traveled to Germany. The first time I went to Germany, I got 2.7 Deutschmarks for $1 US. I think times were good. I went back like 3-4 years later and I only got 2.4 Deutschmarks. And then I went a few years later and it was only 1.7 Deutschmarks for $1 US. So what happened? There's a fluctuation in the exchange rate. So that's what it is. And the Forex always trades in pairs. It just means it's one currency compared to another. So the US dollar, the euro, Swiss franc, the Swiss franc, Japanese yen, the Japanese yen, the Aussie dollar, Canadian dollar. That's all it is. It's just exchanging money. So it really is not very complicated at all. Now, there are some major currencies out there. There's many currencies all around the world, and we personally only trade with 8 of them. These are the strongest ones. These are the stable ones. These are the ones that we feel are poised where you can take advantage of fluctuations without too much fluctuation. I'm going to read these off. You've probably heard of them. So you've got the US dollar, you've got the Canadian dollar, you've got the euro, the British pound, the Japanese yen, the Swiss franc, the Aussie, Australian dollar, we call it the Aussie, and the New Zealand dollar, sometimes we call it Kiwi. So those are the 8 currencies. Most of you have probably heard of at least some of these, if not all of these, okay? So these are the 8 currencies that we work with. Now, there are 4 major reasons to trade the Forex market, okay? And one of them is called liquidity. And all liquidity means is there's always buyers and there's always sellers. So you can always get out in a second's moment. The opposite of liquidity is illiquidity. I've had some friends that have gone into the real estate market, and I've got an associate of mine. He bought a house, thought it was cheap. He and some other people, they put a bunch of money into it. They hired a crew. They repaired it up. They fixed it up, and then they put it on the market. And then it sat for a month, and then for 3 months, and they lowered the price, and it sat for 6 months. And then it sat for 9 months, and it sat for a year. They ended up selling it for less than their cost of lost money. That's because that is an illiquid market. But in the Forex market, there's always buyers and sellers. You can always get in and out 24 hours a day. So that is very important for you, is when you want to get out, you have the ability, and that's called liquidity. Another reason that we really like it is the size, okay? The Forex market is actually the largest market in the world. There is $5.3 trillion of transactions conducted in the Forex market every single day. It trades more than the New York Stock Exchange, the entire equities market, the entire futures market combined. As a matter of fact, there is more volume in the Forex market on a daily basis than the New York Stock Exchange in an entire year. So it is big, it has lots of volume, there's lots of trades. This is good for us. So that means you can always get in, you can always get out. Another reason that I know I like it is focus. Now, I love stocks. I've traded them in the past, but there's thousands of them. If you take a look at all the different markets, there's over 5,000 of them. And yeah, you should always learn something about them. And then you're doing PE ratios and you're going into the financials. And for me at least, it really took a lot of work to research a company, and there were so many of them, and that for me didn't work out great. And options, I love options, but you almost need a PhD in mathematics to truly understand all the moving parts. And futures, again, it's nice, but there's believe it or not, there's over 5,000 different futures, and you know, you need to know, hey, did it rain last night in Brazil or something? And what I really like about the Forex market, there's only 60 currency pairs to begin with, and we only focus on 21 of them. We only focus in on 21 of them. And on any given week, there's 5 to 6 that we look at. So if you look at your work on a weekly basis, you're probably looking at 5 or 6 of them. And Tony brings up a good point. He said, I heard the banks manipulate Forex. And you know, Tony, I'd love to say that the Forex market is the only market that ever gets manipulated. If you look at Enron, stocks get manipulated, fake reports come out in futures. So I'd love to say that there is no manipulation in any of the markets. You know, I think, honestly, I think there's some manipulation in everything, but because of how large the Forex market is, and because of the strategies that we have, at least with the stops, we actually have something called stealth mode, so you can hide your trades. There's different things. So Tony, I'm with you. There's manipulation out there, but we don't think it plays a role in as far as the style and strategy of trading we do. There's actually certain things that we can do to minimize those type of opportunities. So very good question, or very good comment. So again, please do feel free to keep the comments coming. So again, the focus I like, a lot of us like, is on any given week, you're probably only looking at 4 or 5 or 6 of them, usually the same ones. You get to know them really well, and you don't have to spend hours and hours and hours and hours you know, trying to learn new companies or anything else like that. And then there's the last one, and I think flexibility. This I think is the most important one, because there's a lot of things. First off, the Forex market is open 24 hours a day from Sunday afternoon at 5 p.m. Eastern to Friday afternoon, 5 p.m. Eastern, 24 hours a day. And what that means to me, at least, and hopefully to you, it works with any schedule. You know, I know a lot of people that were, me included, I was trying to trade stock and stock options, and the market was open, you know, from 9:30 a.m. to 4 p.m. Eastern time. Boy, you work before then, after that, you try to sneak in during the lunch break and look. It was just tough. Well, guess what? The Forex market is open 24 hours a day. So if you're working right now, say you work first shift, go ahead and trade during the afternoon, evening when you get home. Or you work second shift, trade when you get home. We have a lot of people that work second shift, like 4 p.m. to midnight. They get home 12:31 in the morning. They pull up, open up the charts, and they trade for 15 minutes, 30 minutes, put on some trades. They go to sleep. They wake up in the morning. They're hundreds, sometimes thousands of dollars richer. Okay, so it's very easy, works with any kind of schedule, and you can find trades in under 15 minutes. There are, in the US, there's something called day trading restrictions for stocks and equities, for options. There are no day trading restrictions for Forex, which is very, very nice. It means you don't have to worry about all kinds of regulations and restrictions, which means you can be in a trade for minutes or hours or days, weeks, months, whatever works for you. It doesn't happen often, but if you're trying to trade around an announcement, we've had people get in and out in 30 seconds. That's not the norm, but you have that capability in the Forex market if it's something that you want to do. Okay, everyone has their own stuff. Another thing that's really nice is you can open up a real live money account with just $500, and you can actually start trading. You can start learning with what's called a demo account with zero. If there's anybody here that likes the idea of being able to learn this, start this with a demo account. So they'll put in like $50,000 of simulated money, but it doesn't cost you anything. So you can learn. If there's anyone that likes that idea, put a me, M-E, in the chat box, because I can tell you, when I learn something, I love the capability to practice it, press the buttons, go in and out, and do things where at least I don't have real money on there. I'm learning it. So that's one thing that's really nice. You can ramp up. If people do start off small, they can ramp up to more and more accounts. So start off with a small account. You've proven it. You're consistently profitable. Go ahead and put more money in it. Now, with the Forex market, some people are just looking to trade long-term income. They want to do their wealth, their retirement accounts. Fantastic. Some people are looking for weekly income, and there's some of us, me included, I look for daily income. Doesn't mean I'm in and out every day, but I'm looking for that short-term income. I'm looking for daily to weekly income, and the Forex market allows you that flexibility. In the US, it's tax advantaged. If there's anyone here that likes the thought of making money but paying a lower tax rate legally, the Forex market gives you that. So it is tax advantaged in the US. You can also trade it in the US within retirement accounts if you want. You just have to set up the account just right. Okay, so again, bottom line, the Forex market really provides a lot of flexibility, liquidity size. We feel it offers huge potential, and I'm going to show you a couple of things of how we can do it with minimizing this. Now, first up, I want to go to the charts. So I'm going to try to open up my charts. Could everybody do me a favor? Could everybody do me a favor? Put in a C, the letter C, or the word charts, if you can see what looks to be a charts on the screen. I want to make sure that we've got a good view that everybody can see. So this is right here. This is what we call as the ultimate charting software. This is our own charting software that we have. I'm going to demonstrate or go through a couple of different items on here. But right here in the middle, if you see this British pound, GBP, that stands for a Great British Pound / New Zealand, okay? And what that means is this would be exchanging a British pound for New Zealand dollar. On the right over here, I'm just gonna say this line right here. Does everybody see where this 1.75 is here to the right? I'm just gonna draw a line just so you understand. So right around there, at that point, that's 1.75. And what that means is it would take 1.75 New Zealand dollars to buy 1 British pound. So it's that simple. Just want to let you know that's how those numbers work, okay? Now you see something else right here. It says 1 hour. Well, within the different charts, some of you might be familiar with charting software, you can designate different time frames. So each one of these, we call these bars right here. This is an hour. Each bar represents an hour. But up here, if you want to, you could change it to a 15-minute chart. I just did that. If you want to change it to a 1 minute, you can do that. If you want to change it to a daily, you can do that. If you want to stack charts and you want to put a bunch of them all on one page at the same time, you know, if you want to do this, I'll just let you know there's just a lot of capabilities that this has. I'm just showing you some examples, so you can do more than one at a time. So I'm just going to go back to an hourly. That's the one that I kind of want to show you right here, okay? And what we have here in the bottom, it is the date. So here, for example, it says 2017. So that's the year, June, the month, the day, 27 times 0300, and it goes on. And so we have the exchange rate here on the right-hand side, and on the left and top are different tools. I'm going to demonstrate some of them, but I want to give you an example of what we do in the Forex market. Our job is to capture pips, okay? And if you want to write this down, feel free. And if I do not explain what a pip is, everyone always asks me, and pip stands for, this is something if you want to amaze your friends, pip stands for price interest point. Now, you will never be asked in the quiz here with MTI what that stands for, but our job is to capture pips. Pip stands for price interest point. What exactly is a pip? A pip is the lowest unit of measurement within the Forex market. You know, when you're trading stocks, you can buy 1 share or 100 shares, okay? If you're doing options, they're called contracts. If you're doing futures, oftentimes they're called lots, and we have lot sizes. But like in stocks, you have pennies, okay? So it went up 5 cents or it's 50 cents. Well, here, it went up 1 pip. So it's just a unit of measurement. Now, let me just give you an example. And I'm going to talk about some of our tools, but we have right here, I'm going to expand my out, but what we like to do is we like to look at the beginning of trend. So down here, hopefully everybody sees this down here. This is a low. Market went down to that point and then it reversed direction. So this is what we look at. So from this low, you know, we see that the market went down. There's certain candlestick formations that we look at that we really like. We teach that in our class. But I'm going to use a simple tool. We can see that the market hit this bottom, reverse direction is going up, and we can use different tools. But I look for something called a bullish engulfing candlestick. And you can learn this all manually, or you can use the automation. You can just click on this stuff. I could click select all. I just recognize this, and I know that this is already a bullish engulfing. But we look for these type of things, and then as soon as that happens, that's kind of our signal. I'm going to give you just some really quick lessons. But right there is where we would buy. As soon as that candlestick closes, that would be a signal. The green means a signal. When it closes, it's time to buy. Great. And you can say, hang on to it to win. Well, we go into a lot more information on that one, but let's just say, you know, I'm going to get out at a bearish candlestick formation. This right here is called a dark cloud. You don't have to worry about the names. We let the automation. So I just want to show you something. What exactly is this? How much are we talking about? Well, right here to right here would be this trade. Okay. Does anybody put a Y or yes if you can see in the top left-hand corner, we have range in pips. It says, I'm going to just round this, I'm going to call this 135 pips. I'm going to round it down, bars 8, okay? Does everybody see that? Give me a Y or yes if you see where it says range in pips, 135, and then it says bars is 8. So let me explain what that means. So what that means is this generated 135 pips in 8 bars. Well, each bar is an hour, so this would be 8 hours, okay? So this is 135 pips, and I'm just gonna put a little line right here so you can see where I was talking about, just right there, okay? So that's normally a trend line, but I'm just keeping it there just so you can understand what we're talking about, okay? And I'm just gonna move this down just a little bit. So what does that mean? Well, I'm gonna move this down here too. Let me turn into this. What a lot of people do is they will start trading in something called a micro lot. Okay, a micro lot. Remember how we said that you could do shares or shares are for stocks, contracts and options, lots for futures. Here we are for Forex, we call it lots. So a micro lot, all it does, it takes a $20 investment to control one micro lot. And what happens for each pip, 1 pip is going to equal 10 cents of movement, okay? So in our example here, we had 135 pips. That is going to equal 135 pips times 10 cents, which would be $13.50. In this example, in 8 hours. I'm just gonna put in 8 hours, okay? Does this make sense so far for everybody? So if you were trading a micro lot and you had done this trade, it would take a $20 investment to trade that 1 micro lot. Each pip is worth 10 cents. It generated 135 pips, so you made $13.50 in 8 hours. Now, a lot of you are saying, well, Steve, that's great, but that's not a lot of money. It says, that's okay, because you're just starting out. You're just starting out. That's just kind of like 1 share. Well, now let's say you do the equivalent of 10 shares. Again, we call them lots. So this would be what we have is called a mini lot. And a mini lot would be a $200 investment to control 1 mini lot. What's nice about this is you're doing the exact same work. You're doing the exact same analysis, but this time, a pip is going to equal $1, okay? So doing the exact same thing that you just did. Doing the exact same thing at $1 per pip, you made 135 pips. This would now be $135 of profit. I probably didn't put that in here. I'll put that on of profit in 8 hours, okay? Is this making sense? So you're doing the exact same thing, but maybe you have a little bit more confidence, okay? So instead of doing a micro lot, now you did a mini lot. Now let me give you an example. Here's how this works. You would have, and if you need help, we help you figure out how to open up a Forex brokerage account. Let's say you have a Forex brokerage account. What they would do is they would hold on, if you were trading a mini lot, they would hold on to this $200 investment. They would just hold it. It's kind of like collateral. You would get in this trade down here, you'd get out of the trade up here, and at the end of the trade, what would happen is they would give you that $200 investment back. That was just something to hold. And in addition, you would make $135 profit on top of that. So if you are looking at what we call, a lot of times people call it return on investment, ROI, okay, so return on investment. I should have probably put that down there. So this is an example. People said, why do people like the Forex market? Well, this gives you an opportunity for some pretty high returns. Now, the ROI is the same no matter what lot. You're risking a little to make what a lot of us are saying a lot, but you've got a micro lot, now you have a mini lot. There's actually something else, and this is what most people eventually go to. They aspire to get to what's called a micro lot, okay? And a micro lot, it's a $2,000 investment, okay? And that's just like collateral to hold it. You're doing the exact same thing to trade 1 stand lot. So again, here, a pip is now going to equal $10, okay? So using the exact same example, you did the same trade, you made the same 135 pips, but now you're going to make $1,350 of profit in that same 8-hour time span. Can you kind of see why people are really excited about the Forex market? you're doing the exact same thing. You can start off small. You can start off really small. You can make sure that you are consistently profitable before you ramp up. And I've got Amelia asking, hey, do I have to stop with just one standard lot? No, if you were trading 2 standard lots, it would be $20 a pip. If you were doing 3 standard lots, it would be $30 a pip. You can actually do a lot more. And I had somebody previously said, hey, Steve, you talked about starting off with nothing. How does that work? Well, there's something called basically a demo account, okay? And this one is, it'd be 0 investment, okay? And it still allows you to place the trade, okay? And you can decide in that demo account, is it a micro lot, a mini lot, or standard lot? But you can still do the exact same trades. Everything I showed you, you can still do, but instead of risking your real money in there, it is, it's a simulated account, it's a demo account, so you can work through it, you can practice. I don't know about you, but anytime I use a new tool, I know at the beginning I'm not real up to speed on it, so I want to practice. Well, this allows you to practice. Now you're consistently profitable in demo account, start doing a micro lot, then do 2 micro lots, then do 5 micro lots. You're consistently profitable, go up to mini lot, and then 2 mini lots, and 5 mini lots, then you go up to standard. Now, Jeff asked, how long does it take if you did that progression? You know, that is a great question. We've had some people get there in a week. Some people take 6 months to go from a demo account to a standard lot. It really depends upon you, your own comfort level, and what you want to do. There is no one right answer in that one. It just is when it's right and comfortable. We help you with what's called a trade plan, generating the right type of income. So is this making sense so far, everybody? I just want to kind of come back here. We were talking about what the market is. We were talking about pips and some examples. And again, I just want you to understand, the reason why you can do this is the brokerage firm that you set up the account. And we do not make specific recommendations, but we have different accounts that you know, if you ask us who do we trade with, we can tell you. We're not trying to get in trouble with anybody, but they all work very similar in the fact that they are going to help you by leveraging your account. For example, in that micro lot, you can put in, you know, the certain amount of money, and they're going to leverage the money so you can control a larger amount. Okay, so micro lot, it's 10 cents a pip. A mini lot, it's $1 a pip. The standard lot, it's $10 a pip. And again, you can do more than that if you want. Now, there's something else that's very important, and this is applicable to any investment class you're doing, whether it's Forex or futures or options or stock. I'm gonna, you know, everyone should understand 2 concepts. One's called set, and one's called reward, the reward ratio. So set to me, set is nothing more than the stop, the entry, and the target. For example, when you get in, the price that you get in, that is the entry price. And when you get in, you're probably going to have a target for profit, okay? So that's all that is, and the stop. Now, what if the trade does not go in your favor? You should always have a stop placed in case it does not work in your favor. And if you do not have all 3, if you do not have the entry price, the target, and the stop, I'm going to tell you, do not enter the trade. Do not enter the trade. People said, well, is there risk involved? Yes, there is, but this is one of the ways that you apply proper risk management. If you have a protective stop, you know, if I'm saying, hey, I'm going to risk $100 to make $200, or I'm going to risk $20 to make $50, you have it defined ahead of time what you're going to be doing. And there's also something called a reward to risk ratio. Now, our philosophy, our strategy is you should never enter a trade unless your reward is at least 2 times greater than what you're risking. Okay, so we would call this a 2-to-1 reward to risk ratio. Now, you can find 3-to-1, you can find 4-to-1. There are even greater than that one. I've entered trades where it's a 10-to-1 reward to risk ratio. Those don't happen often, but they are out there. Okay, so the way this works is the risk. The risk is the distance from your entry price to where your protective stop is. Your reward is the distance from your entry to the target. That's to the profitable side. So the example would be, say you are risking 100 pips in your risk. That means your reward should be 200 pips or more. Do me a favor, on a scale of 1 to 10, where 10 would be, hey, I understand what I just said here, the set and the reward to ratio. 10 would be, you understand this basic concept. 1 would be, you didn't understand any of it. Do me a favor, in the question box, just give me a 1 to 10. I want to make sure you understand the basics of risk management, of the stop, the entry, the target, and the reward ratio. Just give me a 1 to 10. So Jacqueline, Holly, Ray, Tony got a 10. Tyrone, Wendell, good. I just want to make sure that you've got it and you're understanding it. Now, let me go back to the charts and let me make sure. I want to go back here. So give me a C again if you want. Hey, Tony, do me a favor. Put in a C or charts. I just want to make sure you see my charts right here. This is what we call is the British pound New Zealand dollar. This is a 2-hour chart. We kind of talked about that one. And I'm going to show you one of the basic strategies that we teach people. Okay, one of the basic strategies. And to begin with, I'm going to just do it freehand. I'm going to do this freehand up here because I just want to show you the basic concept first in theory, and then I want to show you on that one. So Tony, Steve, thank you so much for that. So a lot of you are probably familiar with this, but the market, it goes up, it makes higher highs, it makes higher lows, and then it makes higher highs, and it makes higher lows, and then it makes higher highs, and it makes higher lows, right? You're probably familiar. Is everybody familiar with this higher highs? And then it reverses directions, and it comes down and makes lower lows, lower highs, lower lows, lower highs, lower lows. Is this kind of familiar? The market does not move in straight lines. It moves in wave patterns. And it actually moves in a wave pattern that we're familiar with. Some of you might have heard of this. There's something called Fibonacci. It moves in what we call as a Fibonacci wave pattern. Now, I've heard of the Fibonacci wave pattern a long time. Now, let me just, I'm going to open up a new screen from scratch. I'm going to just Google it, just so you can understand. I'm going to put in the word Fibonacci, okay? So if you want to do this, feel free. I'm just pulling this up right now. Now, Fibonacci, he was actually a 12th and 13th century mathematician, okay? So many years ago. But what he did is he saw something. He saw a number sequence, a wave pattern that repeated itself over and over and over again. We call this now the golden rule, Fibonacci golden rule. And I'll just give you an example. It works in nature. So if I click on the one called nature right here, have you ever wondered how many, when you look at a pine cone, those individual seeds or those individual spots, how many there are? Well, the pattern that goes around is a certain number, and the depth, how deep they are, that goes in a certain pattern. That follows the Fibonacci golden ratio. And if you look at a sunflower seed, same thing. How many times it goes around and how deep, that follows the Fibonacci wave pattern. And if you look at an egg and the overall design of it, that follows the Fibonacci. And I could go on to pine cones, I could go on, but these numbers repeat themselves over and over and over again. For example, in art, or excuse me, it follows itself in nature, but you can also follow it in art. Okay, a lot of art is just made by people just freehanded, and it follows that wave pattern. And if you want to take a look at the human nature, let me just put human anatomy, human face. I'll just put in human anatomy. That when you look at this, well, I didn't mean to have, okay, but when you look at how faces are and you look at how the nose is put together, it all follows this Fibonacci wave pattern, even the famous painting. So all I wanted to show you is just that we follow a system that goes through. Now, Andy's asking a good question. The trading platform, this is called the Ultimate Charting Software. I will be talking about it a little bit later on in the presentation. It's actually a special proprietary charting software system that we've made. I'll talk about that. Andy, I'll go into a little bit more details in a little bit. So trust me, I will do that. So anyway, when we use the Fibonacci, what we do is there's something called an ABCD wave pattern. So the beginning of that new pattern would be the A, the higher high would be the B, then it retraces, it makes a higher low. This would be the C, and makes a higher high. This would be follow what we call as ABCD, okay? So we have the AB, and then retraces CD all over again. So here's what we do. I'm gonna just squeeze this in just a little bit more, make it a little bit easier for everyone to see. I'll move this over here to begin with. What we find is Fibonacci's, when you apply it on a graph, okay, these numbers repeat themselves over and over again. And we have a tool right here. If you look right here, it's called the MTI Fibonacci Retracement Tool. All I'm gonna do is click on this. And at the beginning of this, where this A is, I'm gonna go here, I'm gonna go to that high, and I'm gonna click off of it. It's right there, okay? Now, hopefully you're gonna see a bunch of numbers and a bunch of colors. Let me kind of explain how this works. If you see these red lines down here, this is the way that works. We know that the market makes highs and it takes a breather. We call that a retracement. It comes down into the C area. This is the retracement zone. And let me share with you how we do this. If the market comes down and retraces in this area right here, okay, this is what we call is the red zone. And I'm going to just make that box, if I can do it right, I'm going to call that's going to be red, okay? And if, though, it makes a deeper retracement down to this blue line area down here, okay, if I can do this accurately, I'm going to explain this in a moment. If I can make that blue, see if I can hit my edit button. I'm going to make that one blue just to kind of illustrate so you can see what it is. That's going to be blue. And then this last one is going to be where it gets down to here before it hits the bottom, but that other area right here, this is what we call is the green. I'm going to make that green. If I can find a good green, I'll make it green right there, so green. Okay, so this is the way this works. If you see this retracement, if it comes down and it reverses direction, it retraces anywhere in this red zone, I don't care where it is, but it comes down to this red zone and then stops and reverses, then what we expect is when it comes down to this green zone, it came down, it's going to go, or this red zone, excuse me, it came down to this red zone in here, it's going to go or at or above this red line. Does everybody see this red line above? We feel it's going to hit that level. Let me just do a line. So right here, we see that red line, it's going to get that high or higher, okay? If it goes down to the red zone, it's going to come back up and extend above there. Now, if, however, the retracement is a bit deeper and it retraces down into that blue zone, we found this time and time again, more times than not, if it goes down to that blue zone, it's going to retrace and it's going to come back up to this blue line somewhere around there. Okay, it's going to hit it or exceed it. And if, though, instead, this comes down to the green line, then what we believe, if I can hit the right ones, we feel that this line, it retraced in the green line, and it's going to go up to this green line. I'm just going to turn my auto to it. It's going to come up to that green line. So let me just type this in. Is there training on how to use? Yeah, Andy, there is, and I actually will go through that. Very good questions. Andy asks, is there training on how to use this platform? Yes, there is, and I'm going to show you about that in a minute. So let me just write this. So red zone to red line above, if I can type. Blue zone to blue line above, and green zone to green line above. Okay, so I'm going to share with you how our basic strategy works. If the C retraces in the red zone here, then we expect it to go to this red line above. If it comes down to the blue zone, then we expect it to retrace back up to the blue line. And if it comes down to the green zone and reverses, we expect it to go up there. So red to red, blue to blue, green to green. Now, on a scale of 1 to 10, 10 being, I understand the basics of what I'm talking about. If it comes down to the red zone, I expect it to go to this red line above. If it goes to the blue zone down here, we expect to go to the blue line. And if it goes down to the green zone, we expect to go up to green. On a scale of 1 to 10, with that basic concept, are you getting this? 10 would be, I understand that basic concept of what I'm talking about. Give me a Y or yes, or give me a scale of 1 to 10. 10 being you got it, 1 would be you don't have it at all, okay? And while you're doing that, let me show with you. So it comes down to the C. Now, we teach you how to do this, but what's going to happen is we see that the market is retracing. It hit this low, it's coming back up. There's little patterns. I already talked about some of the candlestick formations. We would look for a certain candlestick formation, and then we would get in. So we'd probably get in about right there. And then what we would do is we would get out at that red line. We would get out right here. As soon as it hits that line right there, we would get out. We don't care if it goes any further. We're not going to chase it. When it hits that red line, we would get out, which again, I kind of showed you that would be right there. And guess what? We then do it all over again. The old, let me share something with you. Then, if everybody remembers this C, the old C, once we're out of the trade, we are now looking for a new AB boundary. Well, here's a little secret. The old C becomes the new A, and the old D becomes a new B. So it's real simple. It's real simple. And then you do it all over again. And then once that is established, we have our new ABCD, we would hit it again. And then this is what we're going to do, is we'll get out again when it hits right there. And then we do it again. Oh, just trying to move down, and I'll shrink my screen again. So you would continue to do this on the way up, okay? So we would continue to use the Fibonacci on the way up, okay? And then it also, I've got Christina asking, hey, does this work on the way down? The answer is, yeah, it does. So then once the market reverses, you would do it again on the way down, and you would repeat itself over and over again. So the market has a tendency to repeat itself over and over again. So this is the basics. This is the basics of our Fibonacci strategy. Now, I just wanted to show you this on a theoretical or on a manual basis, just to give you an idea of it, of what it works. So now I want to go to the live markets. Okay, so now I'm going to live market. Now I just put this down here. Does everybody see we went down and the market reversed itself? So you see where I've got this little line right here. I just did that. That is the new low. The market reversed itself. It went up. So now that's where I want to look at. So I'll go over there, and I'm going to scrunch this in, and I'm going to make things a little bit cleaner. Okay. So what I would do if I want to do this manually, I would take my Fibonacci, I would put it down on the bottom. I would go to this high right there. Okay. And we see the AB. If you can't, just look at this black line. Now, what the market does, the market went down right here. Yep, it went into that area. And then our expectation would be it's going to go right here or above. And sure enough, that's what it did. Now, we have a tool right here, this measuring tool. I showed you this before. So if we just measured this, this would be 320. Let me just go right here. So that would be 320 pips in 3 hours, in 3 bars, excuse me, 320 and 6. Okay, this is a 2-hour chart, so let me write this down. So here would be an example where you made 320 pips. Each bar represents 2 hours. It was 3 bars, so this would be in 6 hours, okay? And that would be $320 of profit if you were trading a mini lot, and that would be $3,200 of profit if you're trading a standard lot. Is this making sense so far? So Steve, I saw you before. So guess what? Once we're out of that, once we took our profit in that first trade, we would do it again. We would do it all over again. And again, I'm doing, this is what I call as the manual. Then I would do again, my next AB would be right. I'll draw it out just so you can see right there, okay? And again, we would, right here, we have our C, okay? Now, our goal again would be to, the expectation is it's gonna get out. And you might not see this, but it actually hits right there, okay? Now this trade took a little bit longer. So I'm gonna hit my ruler, and we're gonna say, now this one took a little bit longer. This isn't typically how long it works, but I'm just trying to show you. So that's 411 pips and 125, 411 and 125, 411 pips and 125 bars. So this one right here is plus 411 pips in, so it'd be 250 hours. So that's going to be about, what is that, about 240, so 24 hours. So call it about 10 days, a little bit greater than a day. And again, that would be $411 of profit on a mini lot, or that would be $4,110 of profit on a standard lot. Now, we're doing this slow and tedious, believe it or not. There are some tools that we have. There are some tools that we have where I've been drawing this manually, and I've had some people said, Steve, I'm not real good at drawing tools. Well, that's okay, because we have something that's called some smart tools. Up here, we can draw some of these all automatically. Let me just give you an example. There is a smart trend line. So somebody said, Steve, I'm not good at drawing trend lines, because if I try to do a trend line, hey, I do this. Oh, but sometimes I don't know which one to do, which one to hit, which peak. Well, we have a smart trend line tool that if I can just point on it, it'll do it all automatically for you, okay? In addition, I'm getting ahead of myself just a little bit. I can extend this line. I'm just showing you some of the tools that's available on this. So I'm going to hit extend. And let's just say, hey, we see right here in short term, I'm changing the things a little bit, but this is a downtrend. When it breaks that trend line, we want to get in the trade. Well, you can click on this, and there's a button right here that says add alert on this trend line. So if you want to, you can set an alert. It can text you, it can email you, said, hey, it broke, it closed above that trend line. Heck, you can actually set up a trade automatically if you want. I am showing you about 5% of the capability of this charting software. Okay, so I just want to give you an example. But what I want to do right now is I'm going to speed things up just a little bit for you. Okay, I just want to show you how this thing can work. Okay, so right now somebody says, boy, is there a way we can let the technology help us work smarter? And the answer is yes. So let me just, I'm just trying to get my screen about, I think it's right about there. Okay, so does everybody see down here where I put in that original trend line and I did it all automatically? We have a smart Fibonacci tool. If I can click on the right point right there, see if it'll let me do it. If I click on this, does everybody see how it all happened automatically? Does everybody see that? So right now, if you had followed this basic strategy that I've been talking about, we call this our Fibonacci strategy, okay? You get in, you wait for it to reverse direction. We teach you how to do this. We're going to use the candlestick formations. We're going to teach you how to do that. But if you look at this already, okay, I'm just going to scrunch this in a little bit for. We've got 1 trade, 2 trades, 3 trades, 4 trades, 5 trades in a row. And on the 6th trade, it did not work. It did not work, okay? Because what happens is it came down, if you look at here, and I'll just show you, we do not win on every trade. I want to be clear, okay? So we came down to the red zone. Our goal was it was going to get up to that red zone. It didn't hit it, okay? And we got stopped out, okay? We got stopped out down here. Does everybody see that? So I want to let you know. But we had 1, 2, 3, 4, 5 trades in a row that we were successful. The 6th trade that it didn't. So just using some of the basic numbers, it's actually greater than this. But let's just say you had 5 trades, and on average you made 350 pips. I think on the first one we made around 350. In the second trade we made about 411. I just want to give you an example. So we had 5 winning trades times 350 pips. So that would equal, okay, that's 1,500 plus 250. That would equal 1,750 pips. I'm going to put a plus sign, plus 1,750 pips. Okay? We had, in this last example, 1 losing trade. And again, I'm just going to say that 1-to-2 ratio. We're going to say you lost 175 pips. Just to let you know, if we did all the winning trades, it would have been more. So I'm just trying to use some basics so we can look at this. So you would have lost 175 pips. So this would have been, it would have been, so that would have been plus 1,575 plus 1,575 net pips, okay? And this would be, if you were, this would be an example of $1,575 if you're trading a mini lot, or this would be an example of $15,750 of profit trading just 1 standard lot, okay? And this is just 1 currency pair, okay? Remember I said on any given week we probably look at about 5 or 6. So this is an example where we're trading just one lot, and we're showing 1 currency. But typically on a given week, you might look at 2 or 3 or 4, maybe 5 or 6 pairs. Now, I want to share something with you. People said, Steve, does it always work? No, it doesn't, okay? Sometimes you're going to have 1 in a row. Sometimes you're going to have 2 in a row. But somebody had asked me, so I've got Billy asked me, does this work on the way down? And the answer is yes. So what I did is I just marked it here because I'm doing this as quickly as possible. And if you want to look, we've got this recent high, and I'm going to get a little bit closer, and I want to show you, again, using the smart tools. I can do this all manually, but we let technology do this for us. I'm gonna hit the Smart Fibonacci tool. If I can do this 1, 2, 3, click. And we have 1, 2, 3, 4. So right now on the way down, we have 1 trade, we were successful. See, it went down, went up. We have 2 trades, went down and successful. 3 trades, successful. And now this is the current trade that we're in right now. This is the current trade. We have this AB. Now, if you were looking at this right now for the first time, here's what we would see. We have our AB. We like it when it comes back. You see right here, it came back to that that middle mark. That is a great trade. And I'll just give you a little head. We're probably a little bit late to enter the trade. We'd want to enter it a little bit sooner, but what our goal is, then it's going to come down to where this red line is down here. Does everybody see this? Now, I'm not trying to sell you on the strategy. I want to share with you, this is what we teach people. These are the tools that we have. We would actually place our stop just a little bit above here. We would have our 2-to-1 ratio or so. So I just want to give you that. But here's what we're doing for you. I wanted to showcase this charting software. It is incredibly powerful. I've showed you less than 10% of the capabilities. We have tutorials. So somebody was asking, there's a whole tutorial on here on how to use the different tutorials. These tutorials right here are about 2 to 5 minutes long, and each different aspect, you can listen to them over and over again. We have workspaces that we share. There's all kinds. There's auto trading capability. So what I wanted to do is I wanted to share with you a little bit about the charting software. But here's what we're doing. Our goal is that you give it a try. Okay. We would like for you to try this software, this charting software, for a week. Okay. And we're going to make it really easy. I'm getting ahead of myself, but for less than the cost of a pack of gum, we want you to try this out, kick the tires, do everything on it, use all the tools. And here's what we're going to do on top of that. On top of that, we've got a gentleman by the name of Joshua Martinez, and he is incredible. He is a great trader. He is an expert trader. He has trained thousands, probably tens of thousands of people. Now, when he started, he was probably like many of us were, did not have a lot of money. All he did, he started with a $500 trading account. As he says, he was a failed physical trainer. Yeah, I think that's how he called it. He wasn't very successful at that. But he started with $500 into his Forex trading account, and he generated over $39,000 of profit from that $500 account. Now, to date, he has made thousands. He's a millionaire outright. He's an accomplished author. He's a speaker. He's a full-time trader, and he's got something. He's got results. The results that he has track record. He has what's called a 76% winning ratio, which means for every 100 trades that he wins, 76 of them are winners, 24 are losers. But when he wins, again, we were talking about that 2-to-1. He wins a lot, and when he loses, it's very, very little. What he's done, he's got something. He came up with a strategy called the London Daybreak Strategy. And we have a training on this. Okay, we're going to teach you. If you want to kick the tires, if you want to try, just try the trading software that I've been showing. We're going to teach you and educate you on what's called this London Daybreak Strategy. And it is incredible. Okay, and the training, there's a video on it. You can watch it as many times as you want. There's no gimmicks on this. Okay, so let me give you an example. Every time at daybreak in London, okay, the Great British Pound, that's London, has these 6 major pairs with the Canadian dollar, US dollar, Japanese yen, Swiss franc, New Zealand dollar, Aussie dollar. Okay, so every day the goal is to make 50 pips per day per currency, and in a week's time, that's going to be 5 days. So 50 pips times that. So the goal would be 30 trading opportunities every single week. If you're not going to hit every one, I want to be clear. You're not going to hit every single one, but many of these opportunities are going to present themselves. And if you take 30 times 50, what is that? 1,500 pips in a week time. Okay, so it is a very positive. It is a very good. It's a very, very simple strategy. We teach you how to do this. This is called the London Daybreak Strategy. We're going to give you this. We're going to give you this free of charge. If you want to just try the trading software, we have a 7-day trial. I'll just tell you, for $1. And you're going to get all kinds of trading. You're going to get the strategy. You can kick the tires. You can do all kinds of things on it you want. We're going to throw this in. We're going to teach you some of the things, okay? Now, this is just one of our students who did this, right? I have to tell somebody, so I came here. Does anyone actually pay attention to the London Daybreak session? This is just in June. I can't believe this gold mine. 60 pips per currency pair for British pound. That's roughly 400 pips a week. Can't believe this stuff is for real sometimes, and maybe we need a course in success, how to manage it. Stand a lot, that's $4,000 a week. So this is just one of the people who was just like you. They tried it out, they kicked the tires, they saw that it was working, and it is an incredible, incredible strategy. We're going to give you that strategy for free. We're going to teach you how to do it, allow you to do it. What we are hoping is that you would just try the ultimate charting software, everything that I showed you. So it has that automated Fibonacci tool I told you. It has auto trends. I didn't even show you the crowns tool. There are so many more tools on there. There's indicators. It can send you emails and text alerts automatically. And you can actually trade directly from the chart. The chart that I showed you, you can actually link this in directly with your brokerage firm. Now, we're not a broker. Okay, we will not trade your account. We don't want your $500, your $1,000, $100,000, whatever you have. We don't want that. We teach people how to manage their own, but you can link this platform, this trading software directly with your brokerage firm so that you can actually trade. So when it says buy, you can actually place orders directly on this charting software, and that order will go directly to your brokerage firm. So you don't have to switch over, you don't have to do anything. It's just very, very powerful. Okay, so you can trade directly from the charts. We have workspaces, expert workspaces that we give you the opportunity to try out. There's demo trading. Oh, I forgot to tell you too, even if you do not yet have a brokerage account, if you wanted to buy, let's just say I'm going to buy a limit order, down here, if you had a real account, I'm not going to click, I have a real account, but this is my main account, but there's a demo account. Anyone who tries this trading software, we're going to give you within this platform a demo account so you can actually measure the success that you're having. It is absolutely amazing. So even if you don't have a demo account set up elsewhere within the charting software, we're going to give you that capability. And then you can auto trade it. I haven't even talked about that one, but there's just so many capabilities. So what we want to do is we are offering you a 7-day trial today. Okay. Now the trial, this stuff is normally 200. Let me go back. Make sure I didn't miss anything. Okay. So this is what we're doing. We're going to give this to you. We're going to let you try this out for $1. You get 7 days to kick the tires on this and try it out for $1. And if you want to keep it after that, it is $59 a month. Okay. With this trial basis, you're going to get everything I showed you. You're going to get the in-chart trading. You're going to get that auto Fibonacci. You're going to get the ABC tool. You're going to have all the workspaces. And here's what we're going to do. We're going to teach you how to do this. Within this, I know Andy was talking about training. We're going to teach you not only within the charting software. I already showed you some of the tutorials, but you get access to this right now where there are different lessons. It's called our Ultimate Charting Software Onboarding Series, where you can go into this and you can learn the lessons, and then you can learn more about the London Daybreak. Let's see if I'm already logged in. So we have the London Daybreak trading strategy. Remember that trading strategy? We've got it all right here, okay? So here's what you're gonna get. Let me kind of share with you everything you'd get. So you're going to get everything. You're going to get the ultimate charting software. Now, normally it's only available to students as part of our package deal that we call Ultimate Trader Software. Our other students normally pay $249 a month for it. Okay, you are going to get this for 7 days for $1. Okay, if you decide to keep it after that, it's $59 a month. There's absolutely no obligation. There's no catches. There's no nothing. Okay, if you want to try it out for 7 days of cancel, it's going to cost you $1 and that's it. Okay, if you do want to keep it, it's $59 a month. We're going to give you what we call some fast action bonuses. Okay, we're going to give you 3 templates. So remember how I talked about some of the different strategies and everything? We're going to give you workspaces. We're going to give you templates. What I'm going to do right now, if I can figure this out, is I'm going to give you a link. If I can do this. Okay. Give me a Y or yes if something just appeared where it started off http://bit. Give me a Y or yes if that showed up. I just want to make sure. I'm going to put it in both the question box and I'm going to put it in the chat box. If you want to take a look at this, if you want to get some of the details, if you're interested in there, is there a live? So Ron has asked me a question. Is there a live trading room? Ron, as part of our normal school, the answer is yes, there is, okay? As far as the charting software itself, that's the charting software. So the answer, Ron, we do have live trading rooms. Yes, we do. That's part of our school education. We can definitely follow up with you on that one. So here's what happens. When you click on that link, it's going to bring you to, well, let me just go, tell you what, I'll open up a page from scratch and I'll go there myself. Show you how it works. So if you click on that link or you copy and paste it in right there, we're going to go here. It brings you to this page, and this is the ultimate charting software. Okay, you are going to get it for 7 days for a week for $1. Okay, and all you would put in is however you want to cover that dollar. So you've got your country, the zip code. You can do it with Visa, MasterCard, American Express, Discover, Diners Club, UCB. You put in your name, your card number, expiration, email, and you hit Pay Now, and that's all there is to it. Okay, and you get it for a week. Now, here's my recommendation. I want to share with you. It is very, very simple to cancel. If you like what you're seeing right now, my suggestion is try it for a week. Kick the tires. It is real easy to cancel. You can call us or you can email us. This is not one of those catchy programs. I've been, I know I've seen some of those. This is not it. Our goal is for you to get the training. Our goal is for you to try out the London Daybreak strategy. Our goal is for you to try the tutorials and the education, because the hope is, if you like what you're seeing, some of you might considering sticking around and do it longer, maybe just checking out some of our other programs. But there's absolutely, positively no obligation to do so whatsoever. Our goal is strictly to get the information out, to let people know about it. So in order to do this, all you have to do is you would enroll in the ultimate charting software for 7 days for $1, for $1, for less than the cost of a pack of gum. I have a 9-year-old daughter, so I know what gum costs, okay? If you can see this, you can copy and paste this right now. I did put it in the chat box. You can copy and paste this as well. Just put it in a browser window, okay? And all of you, you want to make sure you copy and paste it now, because when the webinar closes, you won't see this anymore. So if you have even a 5% chance of interest, just copy and paste it or put it in an internet web browser right now, or copy this page so you've got it. But here's what you would do. You would enroll in the software. Try it out. Kick the tires on it. Watch all the videos. Watch the training videos, watch the onboarding videos, then get up to speed on this London breakout strategy. This is one that we talked about, where you can make 50 pips a day times the 6 different currencies times 5 days a week. Learn it. Do it in the demo account for heck out loud. You don't even have to, if you don't have a Forex brokerage account, don't worry about it. Within that charting software, you can trade it in the demo account and try it out. See if it makes sense for you, okay? Now, from there, if you want to, you can set up a real live trading account, okay? You can do a live or free demo, whatever you want. There's Forex.com, Oanda, there's lots of other ones. And then our recommendation would be start practicing. My suggestion, start in the demo account, get experience, start pushing the button, see how it works. Try out the ultimate charting software for 7 days. And going back to the question, is there a live trading room? We actually do have a live training class, okay, to make sure you're familiar with this, up to speed. Today is Tuesday, so 3 days from now, we have a live training class. So if you get signed up and it's not working right, or you have some struggles, don't worry about it. We're going to have a special class for you for that as well. So here's how this works. Try it out. You get the 7 days of the MTI Ultimate Charting Software for $1 right here. If during those 7 days, for any reason you're not satisfied, for any reason, you may simply cancel your trial subscription by contacting our customer support. 2 different ways. You can call us, there's an 800 number, or you can email us. And I want to share it with everybody. The goal here is not to do a gotcha or anything. I hate those companies that do that. That is not what we're doing. We would like you to try it. We would like to get the training. We would like you to learn the London Daybreak strategy, because we feel if you do, you might like it. You might just decide to stay around. And I've got Sean asking me, hey, is this only good for a Forex? The answer is no. So when I go into the charting, I can open up over here. You see where it says Forex? So these are the 21 different pairs. This is the time frame. You can set up templates. Some people, I had one person ask me about Apple. Well, open up Apple. And you can look on the charts on Apple, and I can do a 1 minute chart. Let me go to a 1 hour chart. And if you want to apply everything that we've been talking about on a stock, you can. So again, I can do my trend lines. If I want to do my smart trend lines, I can. If I want to do my Fibonacci, see if I can catch this time. If you want to apply, I'll just let you know, we don't typically do Fibonacci on stocks, but if you wanted to try it, you can definitely do that. Okay. So you can look at the stuff, you can go through the information, but I want to let you know now on the trial, let me just kind of share with you. On the trial, you don't have access to the stock feed, but if you decide to keep it, you can definitely get access to it. So I just wanted to make sure that everybody's familiar with this. But we do have people that work in the charting software. There's different items. Again, we do focus in on the Forex market, so you definitely have that capability. So if you have questions, and you want to get them answered, you can definitely put them in here or keep them going. So Ron is asking, is the demo account live, data, or delayed? It is live. It is live. So if you have any questions and you haven't yet copied, you can call us. Everybody should do this anyway. Just write down this phone number and write down this email address, so that way once the webinar ends, you still have access to this, okay? So the number, it's 1-800-866-7431. That number again is 1-800-866-7431. If you have the capability to do a screenshot, just do a screenshot of this page, because it's so easy to get started. So again, take advantage of it. I don't know if any of you done this. We want you to. We realize that some of you are going to try it with every intention to just do it for the 7 days and all. We got it. We get you. We understand it, because we understand. That's what I would do. If I were in your shoes, I'd say, well, let me just try it out for the 7 days for $1. And that's what we want you to do. So just click on that link. Let me post that link again. I want to make sure everybody's got it. I'm going to put it back in the chat box, make sure everybody's got it. Okay, so it's in the question box. I'll make sure I put it in there. So if you haven't done so yet, copy and paste that somewhere else. Try it out, kick the tires for 7 days. During that 7 days, learn the London Daybreak strategy. Take advantage of it. Once you learn it, you can figure it out, you can trade it. You've got up to 6 pairs a day for 5 days. If you want to set up the account or just do the demo that's on here, fantastic, but start practicing. Start pressing buttons, start doing it in the demo account, kick it out, and make sure that you attend the live training on Friday. So kind of recapping everything where we're at. Here's the way it is. This is my last slide. This is a special that we are only doing for investor inspiration people only. This is not available outside of this special webinar that you see right here. You get a 7-day trial for $1. After that 7-day trial, if you decide to keep it, you get a special subscription price of just $59 a month. Regardless of what you're doing, you're going to get some what we call fast action bonuses. You're going to get the 3 templates from Joshua. You are going to get the education, the training. You're going to get the London Daybreak strategy. Again, if you haven't yet, copy and paste this, you've got this.